Good evening, everyone. Alice here from Sophie Financial Network. Today is November 1st, 2022. All right, tomorrow will be Fed Day. Very, very important day for the market. Probably the most important day for this um, last 3 months is for 2022, just because they're going to give us what's the verbiage, what's the forecast, or what's the guidance for next year as well. So everyone is betting zero point 0.5 or 0.75 for tomorrow. But December would be zero point 0.5 interest rate hike, and January sentiment is kind of like a bullish for um, 0.25 each month they're going to add to see if the inflation is going down and somehow they're going to pivot the interest rate. We don't know what exactly they want to do, but we are just looking at the chart and see what chart tells us. And here is S&P 500 daily chart. We are getting to interesting period as per my cycle. So we are just entering to the first day of the sun cycle, November 2nd, which is going to be tomorrow. But this is a future market. We are slightly positive, and right now market had marvelous move on Friday, 2 days, especially today. This shadow is kind of like giving some kind of panic to the traders. We will get back to this in early chart, but this shadow is kind of signaling for the market. Probably market is going down tomorrow. I don't know. I expect market is going to have a downside move tomorrow, but again, based on the astrology and based on the cycles that I'm just following, they're giving me surprise. And probably this November, especially November 4th to November 12th, we are hearing lots of surprises from the news. I don't know if it's going to be based on the political surprises, which we have like a midterm election on Thursday, and also NFP for the months of October on Friday. So there are lots of news coming, and probably we will see if they have any surprise for us. But so far, I'm just expecting market is coming down tomorrow. Again, it's going to be very, very hard for forecasting. This is not a forecast. This is just the analysis. And the reason for that is we couldn't build up a good consolidation. If tomorrow market close above this 39.19, I would say then we are going to see a 4,000 probably next week, and that would be great area for short. If we can't, then we should go all the way down to here. So there is no consolidation or there is no short-term target, I would say. The upside target, as you see, is pretty limited. Even if we go up tomorrow and even if we get to 4,000 next week, still I'm looking for downside after that. So even if we have first half of the November a bullish momentum, which I doubt, but even if we get that one, again, I'm just looking for rollover in the second half of the November, and probably this year we wouldn't have enough good momentum for Santa Claus rally. So just bear with me. We are going to have analysis day by day, but for now, let's go to hourly chart. I just want to tell you some levels because when we are talking about the general stuff, everyone knows about it. But here is the M pattern, the one that I'm talking about. So today we couldn't have a nice spike above this previous high. We just barely have a nominal high and then coming down sharply. So this is a bull trap. When bull trap happen, basically it comes with a sharp sell-off, and in 2 hours market just smashed all the way down to here to very, very good level, actually good technical level. Look at that. So here is the good technical level. This is a dynamic trend line, and if I just zoom back here, right, so if I zoom back here, So this is a dynamic trend line for the market, and we just have a breakout above this, double top coming back down, and just reacting to this dynamic trend line, and then coming back up again. So this pullback needs to have a momentum behind that. And so far, it's doing okay, but I see as a consolidation, probably London session, which is coming in 4 hours now. So London session open, we can see some momentum, some bigger momentum up there just because larger volume is coming. But right now, market is heading up to probably 38.81. So that would be, let me tell you exactly the level that I'm just looking for. Here is the level that I'm looking for. Okay. So this is the area that I'm looking for. Even if this spike is going up, the maximum target for next 2-3 hours would be around this. So 38.70 to 38.80, that would be the maximum level for SPY or S&P 500. And then we can see a short setup as well there. So probably I would be in sleep. I don't put like a set and forget just because market is pretty volatile. I'm not relying on the market. But if we get to this level and then reversing back down and clean out this level, market is going all the way down to here. So probably we will have a stop here. The first stop would be 38.08, and then with a short-term bounce, it's going to just break down to 37.79 in hourly chart. If we have a crazy federal minutes or meeting minutes by Federal Reserve, then we should see some kind of volatile action for the Fed. Probably we will get more than 100 points to the downside, and it's coming to 37.48 or so, which is this area. But I'm not expecting that one. But this bearish consolidation, if you just scale it, zoom it out, and if you see from this scale, this bearish consolidation is very, very typical pattern for the downside. And I just want to show you a trick because I'm just these videos are for educational purpose as well. So if you just put this coming down here, so this is the box, and if you copy this and put it just, let's say in next 2-3 hours, market is getting up there. So that would be the maximum stretch of the next downside move to here, to 37, probably to, yeah, 37.95, 37.92. And I told you, here is the level for the next short-term spike down. And that would be a pretty solid gain for us just because we are short in NASDAQ. We are at kind of like a break even. With this spike, I thought that we are getting close to the target one, but it didn't hit our target one, so we are getting back to the break even. But again, I'm just looking for this as like a bearish consolidation, and when this bearish consolidation breakthrough down, and that would be great downside target to 37.95, and that would be it for S&P 500. All right, let's have a look at gold. Gold had a good day today, actually. It has a very nice candle, especially at the early morning New York session. It was all the way up to here to 1660, but it comes down like a lower shadow after news came up, and S&P went to negative territory. Silver had a very nice day. At the early morning, it was like 4% up, but then it ended up to 2.5% up. But this shadow, I believe it's gonna tell us something, that a market is going to have a trust probably to the upside 1660. So if in daily chart we close above 1660, then the next target would be 1678. But general, this pattern is not strong enough to push up the gold to even 1700. So I'm just expecting price is after consolidation, coming down again to test this 1566 to 1592. So that would be the area for the gold, at least for the short term downside target. Again, this is a very, very weak pattern. This is a bearish trend line, especially when market or gold price wants to build up the momentum for the upside. I know there are three higher lows in a row, but these higher lows doesn't give us enough strength to go into the upside. Even it cannot um, establish itself more than 2-3 days above SMA 20. And when this one hit SMA 50, smashed down all the way to here to test this double bottom. So gold needs to close above this SMA 20, need to close above this pivot, and also 50 SMA on a daily basis to show some momentum to the upside. Otherwise, any upside target would be a short opportunity just because the momentum, the general momentum, is bearish as well. So we will give market or gold benefit of doubt for today candle, but today candle was a good move, but it's not enough to say gold nailed the bottom. Still, there are lots of downside target for gold to say gold nailed the bottom. Okay, so let me just cover crude as well. Okay, crude, it went up all the way to $90 per barrel. This is WTI, by the way. And this pattern again can go up to 93. Crude needs to close above this pivot. And this pivot comes along with this pivot. So there are lots of resistance around 93 to 97. But I believe crude shows some good action actually. So if it goes above 93, that would be very, very strong momentum to the upside. And I think 105 is going to be the next target. Not for next 2 weeks, but I believe during this winter time, we can hit above 100 crude again. There are lots of geopolitical issues still there. Russia still um, just fire up the battle in Ukraine. So there are lots of back and forth between US, NATO, and Russia, and China, and Taiwan. So I'm not saying crude is bottom yet. So I thought 78 would be great buying opportunity. Unfortunately, I didn't get it, but it is my area. It was my long area, and 73, 66 would be my level. Unfortunately, it didn't get there, so I was waiting for another just a downside to 73. However, when it gets there, so as you see here, break out nicely this wedge pattern, and now this is just the wave 1, 2, and probably we are at the beginning of the wave 3 going to 97 or 99. So crude is forming pretty well. This pattern can go to 93, but needs to close above 93. Otherwise, that's going to be M pattern or double top, and probably it can go all the way down to here again, and this time can go to 73 as well. So just keep an eye on this one as well. All right, so I think I wrapped up everything. If you like this video, please smash the like button, subscribe to our channel. We will come back tomorrow after Fed meeting, and should be fun. All right, have a good one. See you on the chart. Bye bye.